Life is unpredictable, and an unfortunate and sometimes unavoidable truth is that our finances can be especially unpredictable. Now, if you're in retirement and no longer able to rely on that employment-based income, you may find that retirement is all of a sudden a more tight financial squeeze than anticipated. So what do you do if you're one such person and you find that you can no longer afford your Medicare Supplement Plan? Hi there. As always, if you have questions about your Medicare or health insurance in general, you can not only reach us in the comments below, but also at the number on the screen. There is, of course, no charge for our services, so please feel free to reach out with any and all health insurance related questions. We do release these videos on a weekly basis, so make sure to subscribe to stay up to date. And please, the only thing that we ask is that you go ahead and click that like button so that we can get this information out there to others who are looking for the same type of information. So today we're going to be talking about what your options might be if you suddenly find yourself unable to afford your Medicare Supplement Plan. First, let's talk a little bit more about Medicare Supplement Plans in general. If you're already very familiar with Medicare Supplement Plans, feel free to skip ahead to the later portions of the video. They're time-stamped in the description below. But we are going to talk a little bit more about how Medicare Supplement Plans work. So Medicare Supplement Plans are also known as Medigap plans, and they will fill in the financial gaps of original Medicare, which is Part A, your hospital insurance, and Part B, your medical or outpatient insurance. Medicare Supplement Plans will not offer additional benefits that aren't already offered by original Medicare, so no things like dental, vision, hearing, or prescription drugs, but they will help with those out-of-pocket costs, like deductibles, copays and coinsurance, and they may impose an out-of-pocket maximum if necessary, because original Medicare actually doesn't have an out-of-pocket maximum to protect you from large medical bills. With a Medicare Supplement Plan, you will still have access to that extremely broad original Medicare network. So yes, they are offered by private carriers, but they're really just a financial solution. So if your doctor or hospital accepts original Medicare, and almost all do, they will accept your Medicare Supplement Plan regardless of the carrier. And with Medicare Supplement Plans, there are no pre-authorizations or referrals or anything like that. They really do offer truly comprehensive healthcare coverage, so you can see why they are such a popular option. Now, unfortunately, hindsight is 20/20, but the best way to make sure that you are receiving the best possible coverage at the lowest possible rate to ensure that you're not feeling too tightly squeezed in retirement financially is to work with a broker on the front end. Work with a broker when you first become eligible for Medicare. Yes, of course, your Medigap plan could suddenly become too expensive because your finances have changed, and sometimes nobody can predict that. But remember, Medicare supplement plans do increase on a yearly basis. Yes, those monthly premiums are always going to increase year over year to accommodate for inflation and rising healthcare costs. So this is absolutely something that we recommend that you plan for. And a broker can help you to do this because although all Medicare supplement plans will increase, some plans have a history of lower and more stable rate increases than others. Some plans have a history of more erratic or dramatic rate increases. So a broker who is intimately familiar with multiple different carriers and multiple different plans will be able to advise you on this matter. They can also advise you on plans which have issue age or attained age. Basically, issue age plans are priced based on the age that you are when the plan was issued. An attained age price will change because you're getting older and your Medicare supplement plan rate may reflect that. And then there are community rated plans, which are basically determined by the general demographics of a given community. With careful research, you can absolutely find out most of this information on your own, but by working with a broker, you will save time and energy, and you will most likely save money as well. Many brokers actually don't charge an additional fee for their service, so you're getting the value of an expert on your side to serve as a liaison between you and the carrier, which is the health insurance company, without having to pay any extra for it. A broker can also help you switch to a different plan if need be. Remember, there are 10 different plans with varying levels of coverage and varying price points. This page on Medicare.gov details the different Medigap plans and the benefits covered. So there are 10 plans: A, B, C, D, F, G, K, L, M, and N. Plans F and C are no longer being offered to new enrollees, so if you are new to Medicare, your best option for the most comprehensive coverage is either Plan G or Plan N. Now, if you see here, these check marks indicate that that benefit is covered, and the X indicates that that benefit is not covered. Plan K and Plan L are what's known as cost-sharing plans, so they will cover a portion of the cost for that service. So for the most part, Plan K will cover 50% of your copay or coinsurance for a specific service, and Plan L will cover 75%, so almost all of it. As far as the benefits that are offered by Medigap plans, there is Part A coinsurance. So if you have to stay in a hospital past 60 days, at that point there is a coinsurance per day, and it does go up the longer you stay in the hospital, but it is hundreds of dollars per day. So luckily all plans will cover that. Part B coinsurance, that is 20% of the Medicare approved amount for a given service. Blood for the first 3 pints. Part A hospice care coinsurance or copays. Skilled nursing facility care coinsurance. So if you have to stay in a skilled nursing facility for more than 20 days, there is a coinsurance. And again, that depends upon your length of stay. It does continue to go up, and that is also hundreds of dollars per day. The Part A deductible in 2023 is $1,600. That is applied per benefit period. So if you had to be hospitalized more than once in a given year, then you might encounter multiple benefit periods, which means if your Medicare Supplement Plan did not cover the Part A deductible, you might have to meet that Part A deductible more than once in a given year. The Part B deductible is $226 in 2023, and that is applied just once per year. There's also Part B excess charges. Basically, if your doctor accepts Medicare, then they are willing to accept the amount that Medicare is going to pay. But they can choose to charge up to 15% more. That's what's known as a Part B excess charge. Now, most Medicare supplement plans do not cover Part B excess charges. However, remember that number one, Part B excess charges are not very common, and number two, they're not even allowed in all states. Also, Medicare supplement plans may cover foreign travel exchange, and then this out-of-pocket limit is asterisked here because basically that really only applies to the cost-sharing plans. As you can see, the benefits range quite a bit, so it's to be expected that the prices are going to range quite a bit depending upon the plan that you choose. But that's not really the only deciding factor. There are other factors as well. For example, if you have to undergo medical underwriting, then that can significantly affect the price that you pay. Also, there's some information that you may have to put in here when you go to apply. And then, of course, your area will affect the price. And something that people don't know is that the carrier really affects the price that you pay, because these benefits are standardized. So Plan A is going to remain the same regardless of the carrier that you choose. However, you'll see here that the premiums can range from $166 to $331 based on the information that we've put in this specific zip code. So that's a pretty wide range that is determined solely by the carrier that you choose. Again, that's why we recommend that you work with a broker. So here, once you enter in this information, you'll get an idea of what the ranges are for these specific plans. So let's say that you were someone that is enrolled in one of the more expensive Medicare supplement plans, Plan F. And let's say you had one that is at the top of the range, $431 for this zip code for the specific information that we put in. And you may find that that is just too tight a financial squeeze. Well, you might be able to find a Plan F that's less expensive, or you might switch to a less expensive plan in general. For example, you might want to switch to the Plan F high deductible version. Or you might want to switch all the way down to one of the least expensive options, which would be something like a Plan K. If, despite your best efforts, a Medicare supplement plan is just not within financial reach, then you may be left with the difficult decision of deciding to go with original Medicare alone, without the Medicare supplement plan, or making the switch to Medicare Advantage. This chart details some of the basic differences between original Medicare and Medicare Advantage. So with original Medicare, there's actually no out-of-pocket maximum. With an Advantage plan, there's always an out-of-pocket maximum to protect you from large medical bills. With Original Medicare, although there is a base monthly premium for Part B, it's actually determined by your income. So if you are somebody that's making a higher income, your Medicare Part B premium could be higher. And then your Part A premium is determined by your work history. If you or your spouse have worked more than 40 quarters, then you qualify for premium-free Part A. If you've worked less than that, then there is a premium for Part A. For an Advantage plan, your premium is just determined by the carrier and the plan. With Original Medicare, there are set deductibles, copays, and coinsurance because it is just one plan that we're talking about, Original Medicare. With a Medicare Advantage plan, those can vary quite widely from carrier to carrier, but if you were comparing it strictly to Original Medicare, you would probably notice that the deductibles, copays, and coinsurance are going to be lower. With Original Medicare, there is no dental, vision, hearing, or prescription drug coverage. With a Medicare Advantage plan, those benefits vary widely, and many do offer benefits such as dental, vision, hearing, prescription drug, and many more. So when I explain them just like that, it seems like Medicare Advantage plans would be far more popular than just Original Medicare. However, there are definitely some major drawbacks. For example, with Original Medicare, there is no need for referrals or pre-authorization. And that is a major hindrance when it comes to Medicare Advantage plans. Not only will you need a referral to see a specialist if you have an HMO, but you need pre-authorization. So basically, even if your doctor or hospital says that you need a certain service or treatment, your insurance carrier has to pre-authorize it in order for it to be approved and covered. This is a major hindrance. It can cause issues with people's health. It can cause issues with people's finances. So please do proceed with caution. And then also with Original Medicare, there are no networks. If your doctor accepts Original Medicare, and almost all do, then you can go see your doctor, go to visit almost any hospital. That's just not the case with Medicare Advantage. They can have rather restrictive networks, especially if you're on an HMO plan. And if you do need to go out of network on a PPO, it's going to be more expensive. One more thing I would like to discuss are Medicare savings programs. So let's say that not only has a Medicare Supplement Plan become financially unfeasible, but perhaps Medicare in general is just no longer something that you can afford. Then you may want to look into a Medicare savings program. These are programs that are designed to help you pay for your Part B premium, possibly your Part A premium if applicable, and very often they offer extra help for Part D as well. And there are 4 different programs that have 4 different criteria for your assets and income. The first of the Medicare savings programs is the Qualified Medicare Beneficiary Program, or QMB. So there are asset and income criteria for all of these plans. If you're an individual in 2023, the monthly income limit is $1,235. If you're a married couple, it's $1,663. And then there's also a resource limit. For an individual, it's $9,090. For a married couple, it's $13,630. Now, what counts in resource limits? Basically, it's any cash that you have access to. It's not going to take into consideration the value of your home or your car or anything like that, but it's anything you have in a retirement account, in a savings account, a checking account, etc. Now, as far as the benefits that this plan will offer, it's going to help pay for your Part B premiums. You have to have Part A and Part B to qualify, but most people qualify for premium-free Part A. It's also going to help with the Extra Help program. Then there is the Specified Low-Income Medicare Beneficiary Program, or SLMB. You'll notice that the income limit for this program is just a little bit higher. For an individual, it's $1,478, and for a married couple, it's $1,992. The resource limit remains the same. This program is also going to help pay for Part B and enroll you in that Extra Help program. Then there is the QI program. This one is a little bit different. Yes, the monthly income limit is going to go up on this one. So for an individual, it's $1,660. For a married couple, it's $2,239. The resource limit is going to remain the same. However, you have to apply to this program every year, and it is approved on a first-come, first-served basis. Now, priority will be given to those who've had this program in years past, but remember, you do need to reapply every single year. And then finally, there's the Qualified Disabled and Working Individual Program, QDWI. Again, this one is different because it's going to also help pay for Part A, because this is specifically for those who are still working. So you would have to have a disability, you'd have to continue to be working, and perhaps lost your Social Security benefits and that premium-free Medicare Part A. Now, the income and asset limits for this one are very different. It's a much higher income limit because this is for working individuals. So for an individual, it's $4,945. For a married couple, it is $6,659. That resource limit is actually lower for this. For an individual, it's $4,000. For a married couple, it's $6,000. I would like to say that, of course, the limits are slightly higher in Alaska and Hawaii, but even if you don't 100% meet the criteria, it's highly recommended that you go ahead and apply for these programs because things can be slightly different based on how the state qualifies your income and resources. As always, if you have any questions whatsoever about your Medicare coverage, please feel free to reach us in the comments below or give us a call at the number on the screen. We are licensed health insurance brokers. We're licensed nationwide, so if you do need to make a switch for whatever reason, or this is your first time enrolling in Medicare, we are more than happy to help guide you along the way and, of course, answer any questions that you may have. Before you go, please make sure to subscribe to stay up to date. There are constant changes in Medicare. If you are new to the Medicare world, there really are changes that you want to make sure you stay on top of. And, of course, click that like button so that we can get this information out there. As always, thank you so much for watching and have a wonderful day. Bye-bye.